All right, good Monday morning, everybody. Glad to see everybody here early too. Grab your coffee. We are going to jump on here in just a second and start. Hope y'all had a great weekend. It was absolutely scorching hot in Florida. Great beach weather. And don't tell my wife, but we saw 2 sharks. We had to get out of the water twice over the weekend while we were surfing. And luckily, my wife doesn't watch this show. She didn't see it on the local news. Otherwise, we would be banned from the beach. All right, so let's jump in, everybody. Welcome. Happy Monday morning. This is the 56th episode of FinTech Insider, the breakfast show. I'm Sam Maule, 11FS Managing Director North America. I'll be your host today. Please let us know where you're at in the world. We love giving y'all shout outs. We have a global audience for this. It makes it a lot of fun. And also share the link to the stream. You'll see the link right by all those icons, the emojis and everything. Click that so your friends, your network will actually find out about the show. It's the best way for us to grow our listener and watcher base. I guess you call it a watcher base for these live streams. And also hit that like button and subscribe to 11FS on LinkedIn. If you haven't read our latest research report that we did together with Plaid about how open finance will shape the industry, then go find it on the link that Bianca will post in the comments section or at bit.ly/openfinance2020. All right, first off, 3 news stories from the past 24 hours that and should have yours. Forbes talked about the recent tragedy we saw with the Robinhood user last week, and I do want to address that following the tragic suicide of a 20-year-old Robinhood trader after he saw a $730,000 negative balance in his account. The company's founders released a statement pledging to tighten eligibility criteria, educate resources, and upgrades to its user interface for customers trading options. In a statement on Friday, the Robinhood co-founders said they were personally devastated by this tragedy and pledged to improve Robinhood's customer experience. The company is looking at making adjustments to its platform around option flows involving multi-leg exercise and assignment. Robinhood is also working on changes to its user interface, namely the way buying power is displayed. In this young man's case, although his account showed a balance of $16,000, he misinterpreted his negative $730,000 buying power and cash balance as debt that he owed. The company has also expanded its educational content related to options trading, with more information being added on early options assignments in its help center. Robinhood will hire an options education specialist, that's a new role, to further enhance its new offerings. In near term, the company is rolling out improvements to its in-app message and emails that it sends to customers about their multi-leg option spreads, while also adding more details to its platform about the mechanics of early options assignment. The company will also donate $250,000 to the American Foundation for Suicide Prevention. So my own personal opinion, good on Robinhood for taking these steps. Second story, TechCrunch. They report checkouts.com, which provides an API-based platform for merchants to build checkout experiences accepting multiple forms of payments, currently numbering 150 currencies, all international cards, and popular local payment methods, as well as fraud protection and reporting and other analytics around these transactions. Today announced it's raised another $150 million in funding, a Series B that catapults the London-based startup's valuation to $5.5 billion post-money. It's one more sign that while some startups and sectors have been feeling a huge pinch, large and very lucrative areas of businesses where companies are continuing to grow and investors are continuing to be active. Checkout.com is profitable. I paused for everybody to take that in. Checkout.com is profitable and has been this way since 2012 when it was founded. And so the primary purpose of the funding will be to strengthen its balance sheet. So shout out to Checkout.com. Good for y'all. And last but not least, the story that just keeps, it's going to make an incredible movie one of these days, folks. German payment service provider Wirecard said Monday it concluded the 1.9 billion euros, which is about 2.1 billion US, that were supposed to be held in 2 accounts probably didn't exist. Deepening troubles that last week prompted by the resignation of its chief executive officer. Wirecard was once regarded as a star in the growing financial technology sector, but its shares have fallen sharply after the company became the subject of multiple Financial Times reports about accounting irregularities, hard word to say, in the Asian operations. Folks, just this story, go out in Forbes, look at the story. It just keeps getting crazier and crazier. With that, let's bring in our guest for today. This is Clay Wilkes, the co-founder and CEO of Galileo Financial Technologies. Today's show, we'll take a look at how they're bootstrapped their way to success. Clay, how are you this morning?
Doing fantastic, Sam. Thanks for having me.
And we had a great talk pre-show about how you built this company and how successful y'all have been. I love the concept that you were bootstrapped. You didn't take funding, I think, until 2019. Is that right? The first time?
Yeah, that's right.
Wow.
We took money from Excel October of last year.
I mean, that's what, almost 20 years before you actually did a raise of any sort.
Right.
I'm clapping. You don't see me doing that, but I'm clapping. I find that in this day and age amazing. 11FS is bootstrapped. We're only 4 years old. And trust me, I get how hard that is to do, but it also tells you how successful Galileo's been, and what you were able to achieve. Can you kind of tell us the origin story, if you don't mind, for Galileo?
Yeah, I was looking for something to do. My wife said you're going to be held accountable for all the ideas you don't execute on. And I'd been retired for about 6 years before starting the company, and it felt like the right thing to do at the time.
I love that you're retired and your wife prompted you in a very nice way. That would be like my wife saying, "Please get out of the house."
It was similar to that. I was trying to say it nicely.
Yeah, that's a good way of putting it. But I mean, you've been. I mean, this wasn't your first company that you had ever founded. You didn't do this right out of school, right? I mean, you were, like you said, you were semi-retired at the time.
Yeah, no, I had taken a prior company public, patented voice over IP, and took a company public in the early internet days. A company that predated Netscape and Yahoo,
wow,
both. And so, I did that for a number of years, and then had been retired for 6 years before starting Galileo.
How did you like retirement? Honestly, how did you like it?
You know, I was having a great time. As I say, my wife was eager for me to do something else.
That'd make a great book. I got to figure out the title. We'll get there, Clay. I'll help you out with that. My wife told me to start the company. Did you have a lot of ideas bouncing around in your head? Was that
Yeah, right. So there was a few different things we were looking at, and payments was one. It felt like an industry that was really ready for transformation, and it turns out that it was, and still is. I mean, it's still going through it. So
yeah, I think you did all right. And it's one of those where, I think I read this in one comment when you went through the SoFi acquisition, which was, it's great to see this overnight success. And I'm like, the company's been around for 20 years. Overnight. That's the longest overnight success I've ever seen.
Yeah, somebody told me you were an overnight success 18 years in the making. So
exactly. And I think most overnight success are 18 years in the making. So for those that are watching this and aren't familiar, you went through an acquisition with SoFi. I think it was valued at 1.2 billion, if I remember right. Yeah. So and at the time, a lot of people were like, "Whoa, SoFi, Galileo." But I think the more that we folks like myself kind of crunched through the concept. I mean, when I read it, Clay, no lie, I went, that was my face, which was what?
Right.
And then the more you think about it, you're like, okay, I get that. That makes sense. That's got to be interesting for you, right? This is the second company now that you've done this with.
The SoFi acquisition is interesting because Galileo has been very dominant in the challenger bank fintech category, and so banking and payments, debit, and those types of technologies. SoFi has been very successful in credit, and bringing those two together and finding a way to deliver what SoFi has done in a consumer package out through API-based capabilities, as we do today to our clients on the debit side, is really quite transformational. And I don't see anything like it on the horizon.
Yeah, I don't either. And it caught a lot of us by surprise, to be honest. And do you mind talking about some of the customers that you have? And because I think that does pretty much just establish you're a dominant player in this.
Yeah, no, we've done extremely well. I mean, we've got you mentioned Robinhood today. They're a client. Chime, of course, Current. I was just looking at the top payments. 3 out of the top 5, on the payments rundown. There's a lot. So SoFi, of course, is a customer, but we've been very, very successful in that. I believe 5 out of the top 5 UK firms, the number 1 out of Canada, the number 1 out of the United States, the number 1 out of Mexico are all clients. We've been in Mexico and Latam for 2 months and already signed 5 of the top 20, and I think we're going to sign all 20 as clients. So I mean, we're just we've been very successful in the debit category.
And why do you think? What's the secret sauce?
Well, the capabilities that underlie the APIs is the big reason. So really, we provide everything that's needed for these companies to create a consumer experience and be very successful at it and be behind the scenes.
And actually, in one of the comments, I do want to touch on this real quick. Hey, Allie. Allie said, hey, I loved your, talking to you, Clay, loved your post on diversity and Black Lives Matter. Very quick off the mark, very authentic. I'd also like to add in, this isn't unique for you, right? I mean, if I remember right, you and your wife actually set up I think it was a charity back around 2005. Is that right? Because I mean, when it comes to philanthropic, when it comes to giving back to the community, that's been a part of y'all almost since day one.
Yeah, so we've had Galileo Foundation. That we've been very involved in a number of activities that mostly in Latin America, but also in India and Africa. The primary things have been schools, greenhouses, women's centers, water projects. I think we've done 150 expeditions, something like that, since 2008. It's not 2005, but been doing it for a while.
I love that. That tells you a lot about a company, in my opinion, and the founders and the CEO when something like that is near and dear to them. Yeah, Dan Finney. Hey, Dan just mentioned Argentina's. I'm going to slaughter this name. Uala. Uala.
Yeah, great.
It's fun to watch. Yeah. Told you we get a good international audience.
Uala's incredible. They get great leadership. They've done amazing things in Argentina. They're moving into Mexico, moving into Colombia, and Galileo's going to power all of that.
Oh, that'll be fantastic. Can you talk a little bit about the international side of this, if you don't mind? Because you guys, I mean, like you mentioned, this isn't just the U.S., right?
Yeah, we primarily outside of U.S. It's Canada. We've been in Canada for a long time, but now Mexico. We're live in Mexico right now. We're going into Brazil and Colombia. We've identified 6 additional countries beyond Mexico for Latin America, but we're with the recent acquisition in Hong Kong, we bought a broker dealer over there. We're moving into Hong Kong, but we're also going into Singapore and Japan. We've had a lot of inbound interest from Japan, so lots of exciting things on the horizon right now.
Well, what is it that attracts you to a market? I mean, because you obviously mentioned Latam. There's just so much innovation going on in that space.
Yeah, I mean, opportunity. I mean, you look at Mexico, you're talking about a country that is essentially 50 banks. 5 banks are dominant. 90% of all payments are done in cash down there today. So a company like Uala or really any of them can come in and democratize payments, create an application, a consumer experience that is really transformational. And it goes to all the things we were talking about in terms of inclusivity and all the rest of it. So it's exciting. I mean, and it's hard to say this, but Latin America might be a bigger opportunity than North America when you look at the numbers.
I agree with you. 100% agree with you. A friend of mine, Matt Burton's at QED Ventures, and Matt Burton, for those that don't know, I think we've definitely done a FinTech Insider with us. Matt was behind Orchard Platform that Cabbage acquired. So now he's on the VC side of the house. And he said the same thing, hottest market that he sees. You're looking at 3-4x your investment easily down there.
Yeah, QED and Nigel, they've done great things down there. Great things here, but great things down there. And I would agree with him.
So you made the decision early on for over 18 plus years to do the company as bootstrapped instead of taking money initially. What was the reasoning behind that?
It was really that's a great question. What I was looking for was really the ability to be able to control the destiny. So it's really a choice for the founder, and we chose to bootstrap, not taking serious money, as I mentioned, until the very end when we took it from Excel. The trade-off is between rapid growth and recognition versus control of your own destiny and ownership. And for us, the reason we actually took the money in the end was really around recognition, because we were profitable as well. We had been profitable for nearly all of our the early years, not, but nearly all of our years of existence, and it changes the mentality.
Great.
I've looked at the growth at all costs model a lot. Reid Hoffman, but I think that there's an argument to be made for either, and it's a choice that the founder's got to make.
Yeah, like I said, we're still bootstrapped, and it's hard. It really is. It's not an easy route, but controlling your own destiny, there's a lot to be said for that. It is funny. I know that there's times over the past 20 years where you look back and you're watching the press and you're watching the covers of magazines going, we make money. Just saying, we actually are revenue positive.
Right.
Yeah.
That's an interesting thing. I mean, it's we felt like we were doing great, but we couldn't convince anybody else that was true, because you don't have the analyst coverage, and you don't have the rest of it, the press and all the rest of it. So doing the deal with the Excel, people like CB Insights, they pay attention to that kind of stuff, and so do others.
Yeah, I agree with you. I think I think all of us need to take a step back a couple of times. We've had Oak North on before, and love them, and when I'm on stage a lot of times here in the US, and I say, who do you think's one of the biggest, most successful fintechs coming out of London right now? And is actually making money, by the way, is revenue positive, right?
Right.
No one ever mentions Oak North. I'm like, you do realize these guys made 33 million last year. Yeah, it does make you smile. We live in interesting times. How's that? I'll just say that. But y'all, I mean, correct me if I'm wrong, y'all have now started your first venture capital fund?
No, I haven't. We haven't. No, I'm not sure where you're getting that.
I'm reading show notes and I'm laughing because I have this whole section on venture capital fund. I'm like, why would you do that when you were just acquired? These are probably left over from another buck. I was like,
I'm still very much heads down on what we're doing for Galileo and SoFi. So there might come a time in my life when I do a venture fund, but right now it's not my time. So
and I was thinking that makes no sense. Why would you? I mean, I could see that when you're done with this, but you've been so hyper focused on the company. That's why when I read that, I'm like, I don't understand why. At 11FS, we almost went down that route early on. Yeah. And we walked away from it. So we talked about doing our own capital fund. And I do think it distracts you. It sounds really cool and it looks really cool, but I think it's hard.
Yeah, we're doing something that's somewhat similar, but it's not investing. We've got a product that we announced last December, but it's coming live this month. A lot of pre-release stuff going on right now, called Galileo Instant, and Galileo Instant is really, to me, it's so freaking cool and exciting. You think about what's been going on in the fintech space. So the next, few guys that want to be the next Robinhood or Chime, and that's great. We want to continue to power those companies and do that, but there's a bunch of payments that need to be made that don't have anything to do with a payments company. So Google, as an example, they've got to pay 23 million YouTube influencers every month, for their little piece of advertising. How do you do that? I've got a great neighbor. He's got 10,000 welders that he employs, and he's like, "Do you have a product that would allow me to pay by the weld?" And I'm like, "You give me about 2 or 3 months," and the answer is yes, I'll have that product. So what we're doing is taking all of the friction that is required to get into payments. So how much money have you raised? Who's your bank relationship? What do you know about fraud? What do you know about chargebacks, disputes, et cetera? Take all of that, eliminate it, and consolidate those months and months and months of work down to we've gotten it down to about 23 minutes. Pretty exciting product.
I'm running that through my head. The pay by the welt. My dad was an iron worker, Clay. So, oh my Lord, you're just taking me down a path. Pay by the welt. So pay by the job is what you're saying, right? Pay by the.
Right.
That's pretty cool.
Yeah.
I'm doing the use cases in my head right now, and I'm getting excited.
Oh, there's thousands. We've been in beta, and we've had 450 inbound companies sign up for the product.
Oh, like I so can see that, especially. I mean, a good market in the U.S., but oh my God, you get outside of the U.S., that's huge.
Right. No, it's global, and it's exciting, and really has the potential of eliminating a lot of the friction that is required to. We've been doing that on the acquiring side. We just don't do it on the issuing side.
Oh, it's a great idea. Okay, so I'll be watching this space. Like it's in beta right now, you said?
Yeah, it's coming out. Okay. It's supposed to come out at the end of the month here. So.
Okay, well, yeah, a month from now, we'll be all over that thing, okay? Because I love the idea of it. That's brilliant. And that just shows you can take a space like payments, which you think has just been saturated. When it comes to fintechs, one of the early spaces, right? And I guess we call them the neo or challenger banks, and everybody thought innovation in there is kind of done and you'd move on. And like I said, you've been doing this for 2 decades. It's not. There's so many more use cases to address.
I agree with you. I feel like, Sam, we're in early days. We haven't gotten to FinTech 2.0 yet.
Agree.
We're going to see it. I mean, the internet saw it when all the social media. So the next Facebook, the FinTech-based Facebook, will come about. It's coming.
Yeah.
It may not be identified yet, but we're still in early days on FinTech, and another 5 years, you'll begin to see a few leaders really emerge.
Let's talk about that a little bit too, because we talked about this pre-show. I do think we're going to get new leaders, new companies that come out, and I don't think they're going to be in New York or San Francisco. You're based out of Utah. You made the decision to found the company out of Utah, and when you made that decision, it wasn't cool, by the way. There was no Silicon Slopes back then, right? It was probably like, what is wrong with you? What are you thinking? I mean, what was some of the reasoning behind saying, yeah, we're going to do this locally. We're going to do this here in Utah?
Silicon Valley's got, tons of opportunity, but there's tons of competition as a result. And for me, University of Utah's computer science program is way underrated. If you look at some of the legacy, and I'm talking about Silicon Valley legacy players here, right? So some of the biggest names in Silicon Valley all came out of University of Utah. And so there's tremendous tech talent here in Utah, and drawing on the work ethic that's here. Its proximity to Silicon Valley, you're really only an hour flight away. The transition here in during the pandemic has been pretty straightforward and pretty easy, and now I'm excited about the future. I think we're going to see a lot of interesting things emerge out of the recent events.
Yeah, I agree with you. And I think if you could put a recipe together for how you can launch a successful fintech or tech period ecosystem outside of Silicon Valley and New York, proximity to talent is a large piece of that. Remote working, trust me, I work for 11FS, right? I don't live in London. I live in Jacksonville, Florida. I've been working remote since 2002, by the way. I mean, so for most of my life, whether it be with TSYS, even Northern Trust, and now 11FS, I've never worked out of an office. I'm in my daughter's bedroom, for God's sakes. This is normal for me. I'm just saying. But proximity,
I've done the same thing. Yeah.
But Clay, proximity to talent is key to that. Like here in Jacksonville, which is booming, by the way. If you go and read, Jacksonville's a very it's not even a secret anymore. The talent that's here. You got University of Florida, Florida State, not that far, Georgia just up the road, Georgia Tech, for crying out loud. The amount of talent in Jacksonville. That's why SoFi has set up a physical location here. Amazon has got 2 massive facilities here. Citibank, Deutsche Bank, Bank of America, Wells, all have huge tech campuses here. So don't get that you have to be in New York or have to be in San Francisco. You definitely need to make trips there. but in this day and age, to have a successful company, I love what's come out of Utah. I love it as a story, and I love that it's not happened overnight. This has been a multi-decade progression.
Yeah, yeah. No, it's been exciting to be a part of that, and I agree with you completely.
Quick question that came in, by the way, from Karami, and Karami, man, I hope I said your name right, or Karami. She asked, "Are you looking to get any virtual banking licenses?"
Good question. So the answer is maybe.
Good answer. Great answer, by the
way. That's obviously really exciting in other parts of the world. So it would make some sense in some of what we're doing.
Clay,
but mostly as a vertically integrated stack capability.
Yes. Okay. 100% agree. I love that caveat at the end. Yes. Yeah. Agree. For everybody, that we'll touch on that a little bit later in the week. But yes, I think that's one that makes the most sense. And real quickly, just last question, because we're running up against the clock. You've done this at scale twice now, meaning you've through a lot of sweat equity and a lot of work, and not overnight. By the way, everybody, you've achieved success very, very well. What do you think are maybe one or two of the key factors for that, besides luck and hard work? Don't give me those two, because I know, and timing. Those are my three: luck, timing, and hard work.
Yeah, and I think timing goes to vision a bit. But the number one thing for me would be, an advice to any entrepreneur would be, stay with it.
Oh,
stay with it through, because times are going to come many, many, many times. It's going to feel like, why am I doing this, or I shouldn't be doing this, or things are stacked against me. And if you'll stay with it, it's really, it's pure of will when it comes right down to it.
Tenacity is just so needed in this, because it's not easy. I know you've had quite a few nights where you're like, oh God. The other thing I would add to it, listen to your partner, by the way, right? Your wife looking at you and saying, okay, let's go.
That's critical.
I had that last Friday. I had Nancy Durante on, and it was so funny because the success they had was her being tenacious, right? Her husband had started the company. It was 2 years, and she said, all right, enough's enough. I'm getting in on this. I'm giving us 2 months to get this launched. And in 1 week, she landed Apple, GE, and I can't remember the other client, Tandem Computers, way back in the day, right? I know that.
Holy cow.
Yeah, a dynamo. I love that story, but I agree with you. You have to have tenacity as part. You have to have an incredibly strong backbone and know what your vision is, because this stuff ain't easy. I mean,
yeah, it's really, really true.
It's not for the weak of heart. I'll say that. Clay, you guys, I love what you've done there. I love the company. Thanks so much for coming on here. What's the best place for folks to learn more, one, about Galileo, and two, more about you, if they want to get in touch with you?
Yeah, there's a bunch of places out on the internet. LinkedIn is right now kind of my hotspot. So just reach out to me on LinkedIn.
There you go. And folks, do it. Clay will get back to you. Everyone, thanks for joining us today. Great questions, Clay. Really,
Sam, thanks for having me. Love the show.
It's a lot of fun. And tomorrow's going to be fun too, because we have Catherine Van Noyes from Amazon. She's on the AWS side. Talk about somebody killing it right now. That should be an interesting and fun conversation. As always, everybody, don't hesitate to reach out to me. Sam Maule on Twitter, Sam at 11FS, and LinkedIn just is the space right now, I think, for everybody. Hit me up there, or go to breakfastshow@11fs.com if you have suggestions for that should come on the show. We've gotten a lot over the past 2 weeks, by the way. Everybody keep sending them. They've been great. Everybody, thanks for joining us. Clay, go enjoy the slopes.
Thanks so much. Great to see you, Sam. All right. Thank you.